Bitcoin climbed while the S&P fell. Iran kept Hormuz closed, and a financier once called the king of death spiral financing ended up on both sides of a corporate Bitcoin deal. The week started with oil spiking, Treasury yields surging, and markets watching every move out of the Strait of Hormuz. Iran warned its neighbors, stay out of sanctions or the strait stays shut. That oil spike erased a Treasury intervention by Bessent almost immediately. And with the U.S. debt pile quietly crossing $40 trillion, yield risk is being repriced in real time. Bitcoin caught that updraft. While the S&P was sliding ahead of Fed minutes, Bitcoin was climbing. Crypto quants suggested spot demand was on the cusp of turning positive for the first time in weeks. The corporate story of the week was Metaplanet. The Japanese firm added 2,100 Bitcoin and launched a U.S. Bitcoin Treasury platform, making it one of the most active corporate buyers outside the U.S. But Protos flagged the uncomfortable detail. The financier once nicknamed the king of death spiral financing ended up on both sides of that same transaction. That is a conflict worth watching. Then, FTX executives walked away from the CFTC settlement without individual fines. For anyone who lived through 2022, that resolution is going to sit uncomfortably for a long time. On-chain, whales were quietly repositioning. $146 million in Ethereum moved off exchanges in one outflow. Solana saw 19 million leave Bybit. Beneath the Bitcoin headline, altcoins told a different story. Weakness across the board was a reminder that leverage and nerves still run the rest of the market when macro pressure builds. With the Fed minutes now digested, the market has one eye back on oil. Hormuz is still unresolved. Crude drives yields, yields drive risk. And right now, that chain is intact. Rates, oil, and corporate treasuries. Those are the three things that rocked this week, and they are all still open. Watch which one moves first, because the others will follow.